deep into some huge news that just dropped from the US government. The passing of Trump's big, beautiful bill. Now, this is a pretty controversial piece of legislation, and the big question for us investors is, what's the impact on the stock market, and how will it affect specific stocks and sectors in our portfolios? Hey everyone, and welcome back to the Investment Diary channel. If you're interested in in-depth investment analysis like this, be sure to like this video and subscribe to the Investment Diary channel for more content. Okay, let's dive right into our video for today. So, yesterday, President Trump officially signed this big, beautiful bill into law. It's a massive legislative package that primarily focuses on tax cuts and a substantial spending and funding bill. Now, we all know America is deeply divided, and this bill is no exception. Most Democrats are up in arms, claiming it robs the poor and gives to the rich, ultimately making the rich richer and the poor poorer. On the flip side, most Republicans are fully backing it. Since I'm not American, I'm going to steer clear of the political debates. My focus, as always, is purely objective. What does this mean for the stock market, and which stocks are set to benefit, or perhaps not benefit as much? Let's jump into the highlights of this colossal legislative bill. The first major component is massive tax cuts. We're talking an estimated $4.5 trillion over the next decade. First up, corporate tax cuts. Back in 2017, Trump cut corporate taxes from 35% to 21%. These cuts were actually set to revert, but this new bill makes them permanent. What's more, U.S. businesses can now immediately write off 100% of the cost of new equipment and research. Is this good for stocks? You bet it is. This is significantly positive for corporate earnings. Lower taxes mean more profits, which translates to higher earnings per share. This also incentivizes corporate investments, and we'll talk in more detail soon about which specific companies and stocks will reap the rewards. Next, we have individual tax cuts. This bill extends existing tax breaks and introduces new ones, including deductions for tips, overtime pay, and an increased child tax credit. It also quadruples the state and local tax deduction cap to $40,000 for 5 years, which is a huge benefit for residents in high-income tax states and for high-income earners in general. What's the overall effect of all these individual tax cuts and increased right? It's simple. More disposable income for Americans. When people have more money in their pockets, they spend more, which boosts consumer spending and, ultimately, GDP. Again, this is fantastic news for the stock market. The second major highlight is fiscal stimulus, which essentially means the government is going to be spending a lot more money. In the short term, this can be positive, though the long-term effects can be debated. This bill allocates an additional $350 billion in spending with specific focused areas. 1. Border and national security. There is significant funding for the border wall, migrant detention facilities, and the hiring of new ICE and Border Patrol officers. I even read that the budget for new ICE officers is larger than Russia's entire military budget. That's substantial. 2. Defense contractors are set to rake in billions for munitions, systems, and Trump's Golden Dome missile defense system. What does all this increased government spending or fiscal stimulus do? It will boost GDP, at least in the short term, and provide a tailwind for selected sectors like defense contractors, infrastructure, and construction stocks. Another short-term plus for the stock market. Of course, this massive spending and tax cutting comes at a cost, and that means spending cuts elsewhere. This is where many Democrats are unhappy. The bill plans to cut roughly $1 trillion from Medicaid over several years, which provides health insurance for low-income individuals, and $300 billion from food assistance programs. These major reductions to social programs will include work requirements before individuals can receive these benefits. From the Republican point of view, it's about discouraging people from leeching off the government. There are also much stricter sign-up rules, ensuring only citizens and not undocumented immigrants get access, which many find sensible. Again, I'm not here to judge the politics, I'm here to tell you how it affects the stock market. Finally, the bill includes significant regulatory role. This means fewer environmental and labor regulations, less red tape, and reduced bureaucracy. It will also fast-track fossil fuel projects. All of this is designed to cut operational costs for companies in these industries, particularly oil and gas companies, thereby increasing their profitability. Specifically, oil and gas stocks should see a boost. As we all know, there's no such thing as a free lunch. While there are many positives, this bill also comes with some potential negatives. The major concern for many is that this bill will significantly increase the U.S. government debt and widen the deficit. The Congressional Budget Office estimates that the bill could increase the federal deficit by $3.40 to $4.1 trillion over the next decade, potentially pushing the U.S. government's debt. Elon Musk, who's been very vocal lately, has even called this bill terrible, claiming it will enslave Americans to debt for the rest of their lives. He's even formed his own American political party to offer voters another choice. Good luck to Tesla shareholders. So, are Elon and these economists right that the bill will balloon the deficit? Honestly, I don't know. It's important to keep an open mind. But if this is true, if it does increase U.S. debt to an unsustainable level, could it eventually lead to a collapse? Perhaps. However, I'll never bet against America, as history has proven itself that United States have more resilient economy than you think. My philosophy is to simply hold a portfolio of great companies that we use all the time. Think about it. Whether you like it or not, you use Google Search, Microsoft Office, NVIDIA, AI chips, Visa, MasterCard, and so much more. These are companies we constantly interact with. When you have a portfolio of great companies with strong free cash flow, wide economic moats, and little to no debt, it doesn't really matter whether we have high interest rates or low, economic growth or recession, high inflation or low. If your companies have pricing power and don't rely on low interest rates to perform well, then you have a portfolio designed to do well no matter what happens. So, that's an overview of Trump's one big beautiful bill and its impact on the stock market. Overall, I would say that in the short term, it's a positive for the market. It should boost profits and valuations higher. In the long term, who knows? Bottom line is this: companies with strong free cash flow, low debt, and significant pricing power will continue to do well. It's the weaker, less resilient companies that will face challenges in such economic landscape. What are your thoughts on this bill? Do you think it's a game changer for your portfolio? Or are you concerned about the long-term debt implications? Let me know in the comments below. Thank you for watching, and make sure to subscribe to the Investment Diary channel for more investment content. See you in the next diary.